Okay, looks like we're live. Hello, everyone, and welcome to this week's episode of the Disruptions Talks with NetGuru. We're really excited today to have a super interesting topic in the form of decentralized finance. And I like to usually open these shows with a little bit of a fact on the topic. So essentially, decentralized finance now has captured just over 5% of the crypto space. But it's absolutely phenomenal growth since back in 2018. Currently, there's over $93 billion tied up in smart contract assets across the crypto space as of June this year. And that's up from just $4 billion in 2018. So you can see the absolute wealth of growth in this particular topic. It's why it's such an interesting and trending topic and industry for so many people in the finance game. And we're lucky enough to be joined with one of the gurus himself in the space, Mr. Peter Grosskopf. So welcome, Peter.
Hey, thanks for having me here.
No problem at all. We're very, very appreciative for you to come and join us on the show today. And I know there's a lot of people interested in learning more about the topic. Some people who want to kind of get some insights into your brain and how it works. And I'd love to know essentially kind of as a starting point, where did it begin, right? So you started in the space of kind of information systems, I believe, in university, and that's kind of grown and grown into this position, starting your own company, Unstoppable Finance. So where did the passion and desire begin?
Well, actually, so the passion for blockchain and for decentralized finance comes from different angles. So maybe first of all, so I was always super interested in technology and studied information systems, did some coding on the side. So this turned into quite some sustainable business. So kind of projects becoming bigger, founding a, let's say, NetGuru-like company quite a while ago. And 8 years ago, I came to Berlin after I decided that I wanted to move on, do something else, and also sold my old company shares to really start over again. And luckily, it happened that so while I was working as a CTO at a company builder, that company builder decided to move into fintech space. So it was Hitfox Group and FinLeap. So this was my start in the finance world. While building prototypes for startups for FinLeap, there was also creation of Solaris Bank. So Solaris Bank was founded and was looking for a CTO, and I was lucky to join, which then brought me into banking. And banking and decentralized finance are already pretty close to each other. So back in the days, in 2017, the beginning, when the first blockchain hype happened, I also asked myself, like, okay, so we're founding a bank here and building a lot of infrastructure for fintechs. So are we actually doing this for nothing when now people are able to become their own bank just by keeping kind of their funds in their own pocket and managing themselves? So I started to wrap my head around so what's actually going on, what's also the opportunities for banks and for regulated companies. And the model that I created back in the days, so I called it the 5 pillars of banking. So which meant kind of like all the different services that you can get from a bank, so that I predicted for myself and for the board members that very likely many functions of a bank will move on blockchain infrastructure. So like making transactions, also international money remittance, getting loans on from smart contracts, also investing. And so this was kind of for me the first touch point, really thinking about like, okay, how could this new technological development actually change the traditional finance system a lot? So that was my first angle. And the other one goes back quite a long time, because in 2007 I wrote my master thesis actually on a topic that I brought up to university, which was called social network portability, and it was about the idea kind of 2007. So there have been a few social networks out there that all collected my data, and you repetitively had to enter kind of your profile data at friends on the social networks and so on. And I thought about like, okay, it was the first steps of data portability with OpenID OAuth and these standards being developed. So I thought like, okay, how can I actually build up something like a like a decentralized identity on the web, where all these services can kind of get the data from, and so that I have more control over my data and that I can move into different platforms simultaneously and grant access to my data and also revoke it. And so kind of like these two developments from my perspective really collided then within the past year. So I was able to join Börse Stuttgart, so the Stuttgart Stock Exchange, as CTO, and we built up a regulated digital asset exchange from the scratch, also developing the software for it. And so which runs pretty well, and which also runs pretty smoothly. And so my passion is building up startups from the scratch. And there's now this massive opportunity, like you described in the introduction, in decentralized finance. So kind of a lot of attention, a lot of money is flowing into the space, but also a lot of talent feels attracted of these huge opportunities where you can build stuff. And therefore we said, like, okay, so this is a great opportunity. We know about finance, we know about blockchain, crypto, and decentralization. Let's do this again.
Yeah, definitely. I think I think over your past 10, 15 years, there seems to be this like habitual nature of being able to grow companies beyond the kind of what you'd consider the dangerous period of potentially failing in the early stages and creating like successful businesses. Do you see any kind of recurring pattern that's like made the past ventures that you've been a part of a success?
Yeah, so from my point of view, especially for the people who join a project very early, so I try to, or kind of my metaphor that I'm always using is like splitting cells. Kind of like in an organism, there's one cell, then there's two, and then they start to replicate, and all of them are independent to each other and can kind of help to let the organism grow. And so I think this is a very nice metaphor that you can also compare to building a company, because so when you are kind of the first person, or maybe one of the 1, 2, 3 first persons, you kind of have the idea, and the idea is kind of the DNA of this first cell, and you then kind of like do the first steps in starting the replication. So which means getting further people into the team, motivate them, kind of fill them with this DNA and with this idea and with this spark. And so I kind of became really extreme in my approach. I would say that I'm a big fan of really distributing work and splitting work and also kind of decision power. So especially in my early teams, there's many people who join who get a lot of responsibility, so that they can also kind of give the project also a bit of their painting and a little bit of their style. So because in the end, people who join a very early stage company are also pretty entrepreneurial, and for me, it's really important that these people get this feeling like, okay, so we can build something together here. Maybe they are the people who brought in the first idea and the DNA, but in the end, people who were early joiners in Solaris Bank, for example, but also at BSDEX and also now at Unstoppable Finance, I think they all were able or are able to make it their project, and that's super important. And when I talk, especially to the people who are still at Solaris Bank, who are brought in the very early days, I think they're super happy that they joined that mission, and I think that's great to see. So like when you're as an entrepreneur build up a project and you look back in hindsight and everyone is happy that he or she took the opportunity, then I think you did a good job.
Definitely, because there's always that risk, right? Joining an early stage startup, but it's I guess it's met from your side with this kind of confidence of responsibility within the platform and within the building of the project, and then also this kind of, like you say, passing on the DNA of and wanting the desire for the success of the company as well. Would you say they're the top two things to take away?
Yeah, definitely. So because I think if the people are able to also run themselves and bring in their own ideas, they usually also are more motivated. And in the end, it's not. So of course, I have a lot of ideas also how some things could be built, but in most of the situations, it's not really relevant that everything is really happening exactly how I want it. Yeah. So there's always like 10, 15 centimeters or maybe even meters or kilometers left and right space for still navigating in the direction that I think is the right one. And just letting people the space just like to move a little bit in the direction that that they think it's right, I think still brings us to the, let's say, overall goal and to the fulfillment of that overall goal, and kind of taking yourself a little bit back in these decisions, and let the people also decide something. Really, from my perspective, brings you faster to reaching and fulfilling the goal.
For sure. Yeah, you hire people because of their ability to do a job and their intelligence and you know their competencies in the area. So I guess you're entrusting them and giving them the autonomy to be successful in their role and ultimately provide success for your company.
Yeah, and also maybe also to add this aspect, well known that it's also commonly said a lot, but from my perspective, if you so you can be good at something, but you can't be the best in everything, right? It's probably in my situation, I know a lot of different things, but I don't position myself in a company kind of always being the person who knows everything best. So because this usually makes you a person that that lives alone, because kind of you, because also people then kind of like hide behind you, and just you have to face like every decision and so on. And I think that's in terms of collaboration and really sharing and splitting the work, it really brings you backwards, right? So if you hire people who are better than you in something, that's great, because you can let them do, so because they know better, and also they can focus kind of the full amount of working hours to solving a problem. And me as a managing director and leader in the company, I probably have 15 or 20 different things in my mind every day, kind of, and also ranging from product, tech, recruiting, financial stuff, and maybe some political work, and so on and so forth. And therefore, I really believe that the people who are super proficient in something and who can focus on really understanding and fixing problems, they will be always better than I can do with just like a slice of attention that I would invest.
Okay. That's nice, I think. So there might be a few kind of budding entrepreneurs listening in today. I think it's interesting to hear someone like in your position, or founder of multiple companies, who says, you know, hey, you don't have to be the person who knows it all. It's about hiring smart people and delegating the right tasks for them to carry out on your behalf. Cool. So what would you say, having founded multiple companies or been in at the ground up, what do you say like the initial 12 months of a fast growing scale up, right? Like as in like highly invested, you know, we need to bust to get to market. Is it like the Hollywood glamour portrays, you know, 16-hour working days, or is, how do you view it in comparison?
Well, so first of all, so I what I always say is that especially this very first moment of a company, kind of you don't have an idea what you're doing, don't have a product, you don't have people, you don't have money, you don't have customers. So that's actually the situation where you feel the most comfortable, because in the end, this also means, so you need to kick things off, and as kind of the situation is super, let's say, super critical and super difficult, it really matters that you take kind of trade-off decisions. Yeah. So, and also kind of like Pareto principle, 80-20 rule, and so on and so forth. So it's really about like, so you don't have the resources and the abilities to do something perfect. And that's kind of, because in the end you need to kick off everything, like every let's say like difficulty and obstacle that you have in your company, and that's what I really love. And in the end, so how do you kick things off? So from my point of view, it's really about getting the first people in and kind of delegating some of these obstacles to them, because then you can focus on others. And in the end, so over time you hire, you delegate obstacles. You do this a couple of times unless you have the amount of people in the team, so that you're able really to stabilize things, to kick off the product development, to start experimenting with customers, talking to the customers, and so on and so forth. And then you kind of slice by slice build things up. And I also used another metaphor I created in the past, because I also compared growing a company like it's like a tree which is growing. So kind of there's like in every tree there's this in German you say Jahresring, so it's like this ring kind of which refers to like every year of a tree. So when the tree is growing, and with every kind of, let's say, additional ring that a company gets, you also need to reorganize and act differently. So because it's completely different having a founding team versus having a team of 6 people, having a team of 15 people or 20 or 35 or even 80. So you need to reorganize and organize differently. This applies to a whole company, but also to engineering teams, and kind of like navigating the company through this times of, let's say, imperfection, and just like making trade-off decisions, being super fast and agile in taking, like, going left, going right, going like full throttle, like in the forward direction. So this is
remaining fluid.
Yeah, and in the end, kind of this first year of a company usually also passes very quickly, because there's so much micro actions that you do to navigate, like from kind of like the starting point to already like to the open seas, and that's big fun.
Nice. Makes me want to start a company now. So I just want to say to there's a few comments coming in on LinkedIn. We do see your questions, and I will ask them shortly, a little bit later in the episode. So just hang on there, and I'll ask them. Cool. So the interesting thing for me is your name, Peter Grosskopf. It's very well known throughout like the European tech space, especially in financial services, and it's kind of synonymous with two things, which is firstly building kind of next generation technology in the finance space, and then secondly is the Beanie Hat. So I want to know, like, some people say it has like good luck charm, or there's some superpowers in it. What's the story of the Beanie Hat?
Well, so the beanie, I think, accidentally happened. So I don't know.
Yeah?
It was like even before I moved to Berlin. So I don't even. I think I just like bought a beanie and looked in the mirror and thought, okay, this looks okay-ish, and then it was with me like forever. And yeah, over time, this kind of became a bit of a personal branding, but which is nice, because I think it's important to be remembered by people, and so this opens conversations, and people just recall, so there was a touch point before, so there's like people always you somehow get like a visibility which is super positive, and that I also like a lot. On the other side, so when I want to be invisible and not recognized, even it's like walking through a company building or something, when I take off my hat, then suddenly like people don't recognize me so quickly. So I compared it back in the days with this cloak of Harry Potter that makes him invisible. So when I take off my hat, I'm kind of invisible, and that's also nice superpower of the hat.
So it's like the reverse of a celebrity who goes with the hood up and the hat on. You take the hat off and no one recognizes.
Yeah. So, but maybe also so because you introduced me as a guru and celebrity and so on and so forth. So I actually don't feel that I don't know. So I actually don't like it that much, because I just think that I do stuff. Yeah. So I do stuff my whole entrepreneurial life, and like in technology, and somehow I don't know, forces pull me into certain business areas or technologies and so on and so forth, and I continue to do stuff. And I'm super happy when this matters to people. So kind of when they think like, okay, wow, so this inspired me. So I'm also now jumping into blockchain, and there's like a lot of people back in like 2017 that are inspired, also going into that space, and also like, I don't know, using Ruby back like a very long time ago as a programming language and so on. And it's just like, I don't know, I do stuff, and if people like it, that's great. If they don't like it, well, okay, so it's also no drama. But apparently, it happened that people like it, and that I can actually help to push forward for everyone.
Well, yeah, actions are what will always be remembered by, our actions. Cool. So I've got a question actually from the audience. I wonder if moderators could pop it on the screen, from Michael Struzik. I hope I pronounced that correctly. And it says, hi, Peter. Based on your experience, how keen are regulators to get up to the newest technologies and incorporate them in the current market standing?
Yeah, well, so regulators and new technology, that's always like a I think a difficult relationship. So I think, so that's my perspective, especially with seeing or maybe I start the other way around, because I think like, so what do regulators do? So regulators regulate behavior or activities in the market that are unwanted for, let's say, society, or for a state, or for just like a certain area. And so therefore, I think by default, and that's actually good, regulators are always running behind a little bit, because so first, and I think that's totally good, because so they because they see a certain thing happening, they have a look at it, they decide like, okay, is this relevant or not? And if this is relevant, then they come up with actions. If they would do the opposite, kind of putting rules before kind of developments happen, I think this would constrain people working in technology and entrepreneurs too much, and therefore also looking at let's say financial regulation. So this always has been reactive, and that's a great feature of regulation. Now, so looking back the last 15 years, technology and digitalization is quite a thing. Kind of digitalization is also a development which runs kind of like every year faster and faster, right? Because kind of like development of new tools is faster. There's frameworks, there's more professionals that are well educated. There's companies that can help scale, and so on. So it's so this whole infrastructure leads into faster developments, and therefore the faster the developments are, the more difficult it is to follow them. And from my perspective, and also now when I'm getting in contact with regulators, with politicians, and so on, I'm really trying to explain it in a very neutral way, because so I don't like lobbyism. Yeah, because lobbyism for me is like a word that implies that kind of a certain opinion is kind of inserted into the political system. But for me, kind of the way I try to do this is really a little bit like let's say pro bono technical consulting, kind of explaining how does blockchain work, how does decentralized finance work, what's the opportunity of a smart contract based open source permissionless finance infrastructure. And I'm also talking about like also about the potential challenges that come up with that. And for me, so this let's say relationship between the people who are driving specific developments and doing sort of pro bono technical and technical advice, I think that's super important, because then the regulators really can wrap their head around and also find good solutions.
Interesting. I hope that answers your question, Michal, and thank you. We really appreciate any further questions on the chat. Pop them in, and we'll get them asked before the end of the episode. Okay, cool. So let's get into the meaty part. You started a business recently, Unstoppable Finance. Firstly, congratulations. It's very, very exciting, I'm sure. I want to know, so before this episode, I knew I was going to be interviewing you, and I wanted to learn more about decentralized finance. So I did kind of like a couple of hours every night looking into the space, kind of reading about it to learn more and more. and it's so vast and very complicated. So if we take this from like a bottom level, what exactly is Unstoppable Finance doing?
Yeah, so first, so what's decentralized finance and what makes it so interesting? So like I said a little bit earlier, for me, the blockchain space really developed in waves. So there was let's from the invention of Bitcoin and the first centralized exchanges making, like Coinbase, for example, making trading of cryptocurrencies a popular thing amongst younger people who want to invest money into something else than stocks. And so this developed to quite some maturity. So there's in the meanwhile crypto custody licenses that you can apply for, and so on and so forth. So this development is kind of trading crypto assets and adding them to your portfolio is something which already hit the mainstream. But kind of like the next wave that I see coming is really this swing back from kind of like centralized approaches back to more decentralization. And maybe to give it also a brief history, so there's like this other, let's say, a little bit less hype, but also still very hype term, which is Web3. And Web3 is the idea that kind of, so when the Web1, so the first internet was created, it was super decentralized. It was designed in a way that it could survive like a nuclear war and keeping up communication infrastructure for military. And so like in the past 15 years, the web developed into something relatively centralized. So there's like Google, Amazon, Facebook, and so on, kind of big data silos that act as platforms and access points for many people. And also there's this discussion around net neutrality. So kind of is traffic prioritized when I send it through the web, and so on and so forth. And Web3, blockchain, and also decentralized finance is now this swing back to more decentralization. So in a form that people can own their data themselves, so that they become kind of their own banks, so that they custody their assets themselves. And decentralized finance as a subgenre of Web3 really drives things in banking to the extreme, because when I predicted for myself back in 2017 that all functions of a bank will be delivered in a decentralized way in the future, I never expected this to happen so quickly. Yeah, I must really say, kind of from the first idea of decentralized exchanges, for example, to trade coins, to kind of having decentralized exchanges that have kind of the same trading volumes as centralized exchanges, that happened very quickly. And the idea behind it is, in the end, so that these platforms or these trading facilities are built on smart contract basis, and smart contract is a very limited, small computer program that people deploy on a blockchain. So you can think about it that it's like installing it on the data center. It runs globally, distributed on thousands of servers at the same time. And the blockchain, kind of the decentralized database that stores transactions in form of blocks, like every couple of minutes, is the database for it. And you can use this infrastructure, for example, to implement like a trading platform where people can trade assets, but also to, for example, get a loan from the web, where the smart contract handles, on the one hand, like a pool of funds that people pay into this pool to earn an interest rate, and on the other side, there's the smart contract that handles kind of getting a digital collateral, so like a Bitcoin or some cryptocurrency, which can be liquidated if the price falls too quickly. And so then you have some sort of secured loan implemented on a blockchain, and there is no bank in between, there is no intermediary. So it's simply the people themselves having their non-custodial wallet with a private key connected to it, interacting directly with the smart contract, and like in a kind of peer-to-peer, peer-to-contract way. And so this has a lot of opportunities. Probably we'll talk about this later. And kind of to make this development very easy to the users. That's the core idea of Unstoppable Finance, because when people install non-custodial self-custody wallets, then they somehow still feel like studying computer science, because there's so much crypto lingo around, and what's a hash, what's a private key, and what responsibility do I actually take when doing my own custody. And then also lots of the projects are very cryptic, very technical, very geeky, and also very degen. And so we want to open this whole space by building a cutting edge mobile application. We have a great designer on board who was working with Trade Republic for the first 2 years on making designs for it. And so we want to make the space accessible so that people are able to use decentralized finance and getting interest rates from the web and so on and so forth. And over time, we want to grow an ecosystem also of protocols and decentralized projects around Unstoppable Finance to even extend kind of this financial infrastructure that's built out there.
I think that's really interesting. I would bet that if you ask anyone who is interested in investing in crypto or anything to do with decentralized finance, what their kind of reservations about it were, I think it would be about not understanding it properly and it being too complex. So this is really nice that you're adding almost this like layer to the platform to convert it and make it more accessible for kind of everyday investors or everyday users of decentralized finance.
Yeah, like that. Exactly. And I always compare it with with this guy here. So that's like a portemonnaie, so you have your money in there, you have your cards in there. So if you go to a shop and you pull your card and you trigger a payment, that's done from this wallet. If you want to do like a peer-to-peer money transaction and give 20 euro to somebody else, you do this, and you do this in a private way. In the end, so what we build is kind of the digital representation of that. And blockchain infrastructure and decentralized finance is kind of the transactional layer that enables me to transact in a digital way and also still in a pseudonymous way, and transact value from one person to another, or interact with a shop. And and it's like fully standardized and open. And therefore, we definitely also see a lot of opportunity that these digital wallets can become kind of the platform for many other services. Like so there's projects around decentralized identity happening even on the governmental level in the European Union. So in the end, it's the optimal technical infrastructure really to build an open, interconnected digital ecosystem that then also contains kind of like financial use cases, identity, but probably almost anything you can do in the digital life in the future.
Makes sense. I have a question actually that's related to that, but there's also another question in the comments that I think is quite related, and it's from one of our senior innovation consultants actually, Negru Grosskopf, and he says, in your opinion, what needs to happen in order for cryptocurrencies to become commonly used as payment means rather than just kind of investment as it currently stands?
Yeah, so cryptocurrencies have been invented for digital payments. So think back to the Bitcoin white paper. It was not the idea to build digital representation of gold that people buy and hold. So it was meant as a transactional system for payments. In the end, for that purpose, it didn't succeed. But simply also because kind of this white paper and kicking off this project is so revolutionary. So I think that I know 80% of the promises of the people who started this became kind of true. So that's already quite crazy for a project like to predict like what happens in 13 years. So this is difficult, but so I think like all cryptocurrencies have in common that they kind of created this first, let's say, really working and running use case for using crypto technology. And in the end, there's different projects that were kind of derived from that. For example, stablecoin projects, like the oldest one with USDT, kind of which is a fiat currency backed stablecoin. But there's also now like cryptographic algorithmic ones. So there's now the DeFi 2.0 stablecoins and so on. And I think this is like a different category. So that you that we see this development of kind of some cryptocurrencies and some other artifacts on the blockchain are developing into the, let's say, digital assets space, so that people buy this and hope to that it has a positive effect on their investment portfolio. And I would also count NFTs and what other digital rights also to this category. So people do this for investment. And then there is this category of stable coins or of coins that are actually invented and built for doing payments and for interaction between people. And I think this is the outcome. So that we saw this development like from invention of Bitcoin, then to the first boom like 5 years ago, and now in the meanwhile, so this differentiation into different asset classes and also use case scenarios. And therefore, I would say like for the day-to-day transactions, that's definitely the stable coins that make a difference here. But that's even adopted these days also from kind of like banks, from the credit and debit card schemes like MasterCard, Visa, and so on. They all in these days have close eyes on the stablecoin market, because in the end, I think it's well anticipated even among the regulated companies that there's quite some beneficial infrastructure behind stablecoins, and so people will adopt it.
It's interesting. I kind of view it as kind of similar to the autonomous driving market, and I don't know if that makes sense, but for the autonomous driving market to work, and this was meant to be kind of we were meant to see advancements in that space in kind of 2020, but the reality is the infrastructure isn't there to support the autonomous vehicles driving on the road. And for autonomous vehicles to be really successful, they need basically 90% of the road to be with autonomous vehicles, because the less human error has less effect on autonomous vehicles. And I kind of feel that that's very similar in decentralized finance, is that we need this tipping point at some point where people say, okay, we wanted to go from cash to cashless society. Now we need to move from cashless society to digital payment society. And that means that some kind of governments or banking authorities need to relinquish some of their control in order for that to happen. So as you're building like a platform to enable this to happen, do you see this as like a potential short-term like prospect, or is this like way to, you know, are we talking far in advance? Because the rate of some of the technological advancements are happening at the moment, it could be, you know, quicker than we think.
Yeah, so I think the good thing about blockchain decentralization and crypto is that there's so many different use cases that where it's worked on in parallel, so that kind of this let's say market adoption really happens on so many angles, so that kind of like this parallelization also drives the whole ecosystem. Because of course there's the financial use cases, but there's also the non-financial use cases. I don't know, producing solar energy on your roof and tokenizing it, and then kind of selling it on decentralized energy markets and so on and so forth. There's like a lot of use case scenarios that are beyond finance. So therefore, I'm pretty keen that the adoption can actually also go quicker, because in the end they will all be connected in a digital wallet, no matter like if it's finance or not. And that's exciting also about that opportunity. And also regarding adoption on the financial side and for payments, I think the nice thing about stablecoins and cryptocurrencies is that it is a digital means of payments, but at the same time, it keeps the same privacy, or at least like almost the same privacy as pocket money, right? And I think this makes it already so much more interesting for the broader public than completely fiat currency based economic infrastructure. So like in the Nordics, where people are paying everything with cards, which means kind of every single transaction, also the ones where you actually don't want anyone to know about it, will be known by someone, or at least transparent to someone. And I think it's a great opportunity to have kind of the best of both worlds, so that you're able to be, let's say, as anonymous or pseudonymous as you can be with pocket money, but at the same time doing digital transactions. So this definitely comes with other trade-offs. Kind of one of the very much discussed topics is anti-money laundering and terrorism prevention and so on and so forth. But also there, I see the opportunity, especially when you start connecting the digital ecosystem. So like connecting digital identity with a non-custodial wallet, plus having the transactional layer of blockchains and the means in finance kind of provided by smart contracts and tokens and cryptocurrencies. I think if you bring this all together, you can really marry everything at the, let's say, highest common denominator and not on the lowest one, because then everything is digital. And I think there's a way to do this.
Definitely. In terms of unstoppable finance and the kind of the work that you're doing in this early stage to help that, then what do you think the kind of biggest challenges are that you're facing right now, if you can be open about that topic?
Well, so also many people tell us that we kind of start the company with the perfect timing. Kind of the DeFi is getting a lot of attention. Crypto is also getting a lot of attention. There's still white spots. There's like regulators are having a look into it, but there's not that many outspoken rules. So therefore, kind of probably the biggest danger is that everything looks so perfect that we might forget about something. So therefore, I think we're definitely in the driver's seat, but we definitely need to also make it happen now. So therefore, I think that's maybe an obstacle for us. But still, kind of so having this experience in the space and also with building companies in the past, I think we're currently pretty confident that we can grow fast. So we got a substantial financing round. We hired now all the people that we need to build the first product, and we put out a very ambitious timeline now to build the first increment of the product. And then so we will go live next year. We will see how the market will move in between. So DeFi is super fast. And so it's probably the fastest rabbit that you need to run after, and which sometimes makes tricks and goes left and right. But so we give our very best to launch pretty quickly. But at the moment we're super confident.
I'm very excited to see what the outcome is. And so we actually have a lot of questions coming in, so I'm going to try and keep up to date with them as they're flying in on LinkedIn and other platforms and everything. So we'll start with Andrea Schruter. I think that's how you pronounce with the 2 dots over on the U in German. Hi Peter, is Unstoppable Finance only planning to address retail clients, or are you also planning to offer crypto as a service solutions too?
Yeah, so you pronounce it perfectly, Schlüter.
Oh, good.
So
Schlüter, sorry.
Yeah, well done. So for the first step, it's definitely about building a direct relationship with end customers. So I'm careful while saying this, because in the end, like, decentralized means it's as decentralized as my portemonnaie here. So in the end, so we like in the decentralized world, you don't really own a customer relationship because you have no centralized server where you have a login or whatever. So it's in the end we're providing that tool for people to access this whole new world of DeFi, and that's kind of our login that we create, so that people, where we will be the window for millions of people in the future to tap into this whole space, and maybe even then on the long run move beyond finance and using such a digital product. So at the moment, so we're really focusing on bringing online that product increment. What else will kind of come afterwards? It's very difficult to say because we really focus, but it's yeah. So it's I think it could happen that we could also partner and help other companies also to move into the space, especially when we develop a really comprehensive technology. But that's at the moment at least not the plan because we focus on the go live.
Okay, so is it potential partnerships to help other companies do that in the future, but not your core focus as of now?
Yeah, so that's so a little bit earlier I said kind of like an ecosystem of also of protocols and decentralized projects that will be associated around unstoppable finance. And I think the biggest mistake that you can do as an entrepreneur is really defocusing and doing too much at the same time. Because in the end, so I always say like, okay, so your brain can only think about one thing at the same time. It's single threaded. Yeah, so it's like a single threaded computer processor, and therefore kind of like assuming that that you like at the same time axis can do things twice is just not happening. So it's physically not possible, and therefore I just said like, okay, so if we have like, if we develop assets that could be leveraged somewhere else, and where some others could take it further, or I don't know, we develop a slice of a protocol that others use, and vice versa, and this all together becomes bigger than like each of the parts. So that's the idea of decentralization, like having a lot of collaboration happening around, and really kind of becoming one node with many connections in such a decentralized ecosystem. And that's where we want to move the company over time in the future.
Perfect. Well, thank you very much for the question, Andrea, and also Christoph as well. I forgot to thank you for your question. We also have a question actually from our CEO at NetGuru, Marek Talarczyk. Hi, Peter. Happy to see you here. Your team has recently raised a seed round. Congratulations. What's your number one tip for any DeFi entrepreneurs looking for their first investor?
Well, so I think we've been pretty lucky with the investing round, because so we were somehow old guys, and therefore sometimes the age really helps you to do something, because so when people know about you and you know people, so then this usually goes quicker. Also, there has been like the days these days are really crazy for entrepreneurs. So I think there has never been times where so much money was looking for deployments, and so therefore I think it was this combination, right timing. It's an interesting topic. We're an experienced team, so that helped us a lot, so that we were able to raise money. I think for like new entrepreneurs tapping into a new adventure, I think it's really about it's about building relationships. I think kind of pitching and that's at least also the advice that I gave also quite recently to some people, that in the end, pitching to an investor is like selling whatever shoes to a person, or selling software development to potential clients. It's in the end, so you need to see like whether there's some connection, also like on, let's say, on the human level between the people. You need to see if there's like a connection on the economic level, so kind of like the price, what you do, and so on. Is there also this conviction also on the investor side? So are we able to show them that we're able to make it happen? So if you're not able to show it to them, then you need to think about like, okay, how can we show this to them? And in the end, So while you optimize, then in the end you get the right mix to also convert when getting investments in. But I think this is like this is really like a psychological, and also like a really, it's really about like humans talking to each other, and when there's when like a relationship is created, and when the people feel that there's some sort of bonding, then an investment is also going to happen.
Okay, so you consider it like a part of a good company idea, good relationship with the potential investors, good way of showcasing the idea, not just having a good idea and then mixing those all together, essentially.
Yeah,
and sowing
and
your
it's also
seeds between multiple.
Yeah, and it's the so when preparing a pitch, it's really the first, or at least it should be at least one of the first times when you really also do the self-reflection. So because it's really about like, okay, I want to build a new fitness startup, whatever. Okay, so what makes me special? So why do I think can I attract more users? How do I attract more users? Am I, or is the team that's doing it, is it the right one? If not, who's missing? Where can I get these people in? So it's really like seeing things from multiple dimensions, and really asking yourself like, okay, are we really able to make it? Okay, so if not, how can we make it? So what's missing? So it's just like asking you all the questions, and if you're able to produce answers for that. So kind of, yeah, well, so how do you want to market your app? Yeah, so we will market it to fitness studios. Okay, how do you do this? Yeah, we have whatever the former European leader for whatever for McFit or whatever fitness chain in our team, and he has a lot of contacts. And it's just like, okay, question is answered. Great, yeah. And in the end, so it's really about you like challenging yourself, probably three layers downwards, like of questions. And if you do this and you find the answers for yourself, then you will also do a successful pitch.
Okay, that's really insightful, and I'm sure everyone will be, any of the entrepreneurs listening today will be very appreciative of that answer. Okay, we have some more questions as well. So I'm going to go to Sophia. Her question is, what are your thoughts on striking the right balance between easy access to services with great user experience and making sure that the customers are aware of the exposure associated with investing in high-risk assets?
Yeah, so that's a difficult question. So in the end, so it's also a combination of many aspects. So first of all, the people. So you like on the UX side. So for example, creating a private key or a private seed phrase and secure and storing it somewhere. I think that's the first step, because I think many solutions out there are built in a way like, hey, so this is your private key, please don't copy it, please don't make a photo. And they even prevent it like from making photos, and you need to type them down. And people already, while typing down like dozens of words, it's just like maybe they're not even good in typing. And so it's very, very cumbersome, and people already feel afraid like from the first second. And so I think the usability, it starts with making this process very, very easy and very secure and very manageable for the people, because in the end we're still living in a world where probably most of the people we know are still not using password safes. So kind of keeping their email password secure is already quite a burden. And then having like a digital certificate or a private key and keeping it secure, so that's probably way beyond the abilities of many people. And yeah, so we will make this very easy. And then I think it's different dimensions also of trust that you create. So first of all, the app needs to feel very trustworthy. The app also needs to be created in the way so that people can trust. So like security measures, infrastructure, also processes behind. So kind of we spend quite some time in regulated companies like Solaris Bank and Börse Stuttgart. So we know kind of how organizations are built that are considered secure by external auditors that are entering these companies like every year and giving a grade. So we will base all the processes that we have internally on these insights and build it up in a proper way. Yeah, and then it's really about explaining the space, kind of what happens when I do what. Yeah, so kind of what does it mean interacting with a smart contract? What's so good about it? What's the potential risks? And I think the whole space will get a lot of gain when this education, how this works, and kind of also how the risks are shifting, like to other risks. So once this is understood and the people really understand, like, okay, yeah, so like when I do something with money, there's always risks. There's also risks when I do this with a bank, but kind of the risks start to differ from each other, and I need to understand that.
Yeah, I think the smart contracts, particularly, they're written, right? For those who are unaware, they're pieces of code that are written by groups of people. What protects them from, like, for example, as something as minor as like software bugs?
Yeah. Well, so with maybe also like in relation to this question, to this previous question. So the thing with smart contracts is that well, it's like I said, it's very limited programming. So of course it's Turing complete, which means you can build everything with it, but still as every method call, every resource that I use, kind of like every millisecond of computation costs fees, kind of like network fees and gas fees. So therefore, people really try to minimize and try to write really just almost the necessary amount of lines of code and to keep it as small as possible. So therefore, probably nobody will write like a Windows XP operating system on top of it, because it would just be kind of doesn't make any sense. Yeah, so these programs are very small, and once they are deployed to a blockchain, so kind of once they're installed, they run there forever. So kind of the idea of a blockchain is that you can't change the transactions that happened kind of some time ago. So once something is written into a blockchain, it will stay there forever. And so this has a tremendous effect on the development, because kind of when, let's say, the tradition, or let's say even the modern way of doing software development anticipated continuous deployment and continuous integration and all these ideas of shipping small sizes of product increments, like almost many times on a daily basis. Then in the blockchain space, it's kind of doing the opposite, so that you do releases and probably every few months, and each of these releases is very much audited, so that let's say projects with reputation, so they really get external auditors in, so they do a security audit on the smart contracts and all facets of this decentralized application. And so the release only happens when the auditors gave their go and everything is really secure. Because so but if you see the hacks that happened in the decentralized finance space or in the blockchain space, most of them happened because there were like silly mistakes that usually would have eaten by a framework that you could use. But also if the testing was not properly, you deploy it, then you can't change it that easily, and then there's an exploit, and then also funds get lost kind of forever, because they're not reversible, so there's no intermediary that can kind of book things back. But so therefore, kind of also to really to generate trust and to make things as unrisky as possible for people and for customers, it's super important to build even more of these audit infrastructures. So companies who focus on doing security audits and really giving a proof, like, okay, so we can consider the smart contract as being secure and well written, so that it will work how it should. And once this happens, like even more than today with the projects, then I think there's kind of like the risks that remain for the people become quite small, because so there's the potential risk that the developers behind the smart contract might do some actions that are not wanted, but there's also mechanisms around that to prevent that. And then there's the potential, let's say, user error that happens. So somebody is losing the private key or doing something wrongly, but that's then about the interfaces and apps like us to prevent that from happening.
So there's two main things really that I think are preventing a large portion of people from adopting kind of new technologies, such as DeFi applications. And I think it's trust is number one, and then usability. Now, you've already said like what you're building at UF is essentially going to counteract this struggle of like being able to understand and use decentralized financial applications. So where do you think we can build the trust? Because, you know, if I speak to my parents, for example, I hope they're not watching because I'm about to embarrass them, but they'll have, you know, they'll have like a deep distrust for anything to do with that's removing some sort of human layer. But anyone from our generation understands that the human error is probably the biggest, you know, problem with most things. Car accidents, financial mistakes, legal contracts, etc. It's all, you know, 85-90% of the errors are down to human error. So it's like, well, how do we build the trust with in the people in the large mass market who are going to be using this kind of technology in the future?
Yeah, well, so there's one thing that I always ask, that I always say in these situations, and people call me nerd afterwards. So it's like the problem is the human, yeah, like especially also in finance. So who did manipulate in the Wirecard scandal? Was it like the humans who want to get like a additional benefit or whatever profit, or just like make things look better than they were actually? Or did the computers do some revolution and just like fight up against the humans? No, so it's the humans who try to get like to get more, to kind of like to trick, to get a better price, to get a lower rate for interest and so on and so forth. And this is also the reason why the traditional banking system, and also like the practice of doing audits, is so cumbersome, because so it's so difficult to kind of like understand what happens in a company that has 10,000s of employees, and it's kind of building these structures with market side and organizational side, and having 4I principle processes and documenting everything, audit trails and so on and so forth. And all the paper that's produced, it still doesn't give you a 100% guarantee. A computer program is very simple. So it's like, if lower than 0, then do this. If higher than 0, then do that. If equals 0, then do something else. So it's just like you can really follow the program and all its control structures, what's going on there. And in the end, the computer will always do what's told to the computer. So the computer would never say like, oh yeah, there's another computer, we are from the same chip factory, and I will do a favor for her, and I don't know,
cronyism,
give faster execution or computation. So it's not happening. Like, computers are always fair, and therefore kind of that's the benefit of decentralized finance, that it's mostly handled by computers. And kind of for the rest, so where you have human interaction and kind of, for example, somebody developing the smart contract and deploying it somewhere, so you might need to find different compliance measures and standards to really make it secure and trustworthy. But I think alone the fact that 60% of the rules that you need to follow as running a bank or running a financial institution or financial service company is really about like, okay, how do I control these human beings that do their own mind like about stuff? So this will be scratched, and therefore I think in the end, so we need to explain your parents that they can trust computers, and the way it's built, and for kind of how it's implemented, and that it's implemented the right way. There might be kind of even certification companies in the future that just make a stamp on it, like, okay, so this financial service, this smart contract is really working the way it should do, and then everyone who's not technical will trust in this stamp.
Yeah, because it's not just one person writing the code that then implements onto the smart contract, right? It's sorted and approved by a group of people before it's uploaded onto the blockchain.
Yeah.
But
the nice thing is that you in the end you evaluate the result, right? So once kind of like a group of people does something, and then it gets kind of submitted to the main chain, and in this moment you can have a look at it and say like, okay, so this is all working fine, this is doing what it should, and so on and so forth, and then it gets deployed there, and then you can trust it. And so I think this is the beauty of it, so that it's open source, it's permissionless. So people can really make up their mind from the external, and the people who are not technical will be able to trust people who kind of, make up their mind for them and show it to them.
Yeah, I think, the problems, especially with my parents' generation, started with the film I, Robot. I don't know if you saw this film with Will Smith. And they create artificial intelligence robots to help around the house, and all of a sudden one of them forms consciousness and takes over and starts changing the way it behaves, and that's where the distrust comes from, I'm pretty sure. My dad loves that film. Okay, cool. We still have a huge audience on, which I'm really impressed with because it's been over an hour now. But I'm going to make this the last question, and it's quite an interesting question because you mentioned briefly earlier in the episode about NFT. And so this is from Pavel Stachitsky. And it's we've witnessed some spectacular transactions on the NFT art market again. Do you think that there will be an aftermarket for such tokens as the one sold by people? So would basically, besides art, can it be used for? What besides art could it be used for?
Yeah, so the development on the NFT markets is really super crazy, and I sometimes also think like, okay, wait a second, so this is maybe a little bit too crazy or too heated up. But I think in general, so this idea of having like a digital certificate to prove kind of the origin of an artwork, and kind of proving my ownership in it. I think this is something which is like super revolutionary. Yeah, because let's imagine every artist in the future will like has a private key and can sign kind of like their work and create kind of like digital certificates, and the blockchain is able to move them from one owner to the other, and probably giving kind of like this. So there's implementations of the NFT standards that give kind of royalties with every transaction to the originator. So which means kind of Picasso or the kind of the sons and daughters of Picasso are able to kind of get like royalties also in the future. So this just opens crazy opportunities, and therefore I think maybe like the NFT art market is heated up kind of with let's say cartoon pictures being sold for insane amounts of money, but so in the end this is like all experiments that happen at a high speed. There's now also traditional artists getting into the space and using that technology for their work. I think this is super great to see, and maybe moving like beyond art for NFTs. So I describe kind of tokenization like also as a subgenre of blockchain, as that I can kind of put everything which I can own, so where I can have an ownership in, or that I can use, so like a license, into a token. So which means so I can own an artwork, I can own a car, I can own a house, I can own like a share of a company, I can own like a share of a fund, and so on and so forth. So like all these things that I can own, I can express in tokens, or like in fungible or in non-fungible tokens. So it's like one of the tools for that, but also potentially things that I can use like temporarily. So like a hotel room, like a flight ticket, like a train ticket or whatever. And so in the end, NFT is a super powerful technology to kind of make a technical implementation for something that exists in the real world and making it more digital. So, for example, like an NFT could or invoices in the future, yeah, invoices that a NetGuru sends to their customers could be an NFT in the future. So which kind of proves that it's really coming from NetGuru, but at the same time, you could use this for financial products. I don't know, giving NetGuru a loan, to get the money immediately and not after 30 days of payment period.
Yeah.
So it's just yeah. So I could continue talking. So this is art and NFT has been the first use case, but it will be used for a lot of stuff in the future.
So you think digital signatures could be essentially on parallel to working with any kind of digital financial applications, right?
Yeah,
especially
exactly.
in a layer to prevent fraud as well.
Yeah,
it's really interesting.
At the same time, so
yeah.
So if NetGuru originates an invoice and signs it with a digital signature, with the private key, you can already prove that this invoice is really coming from NetGuru, not from a fraudulent person.
Yeah.
And so it's so you could do this today in the afternoon.
Interesting. Well, maybe the CFO is watching, and she can consider that for the future. I could honestly talk to you all day, Peter. It's been really, really interesting, and I can see by the amount of people still left watching, they're all finding it incredibly interesting too. We've had a really, really successful episode today. There are more questions, but I'm going to get them to. Well, I'm going to introduce them either on email or put them on a document. Maybe you can help answer in some spare time over the next couple of weeks. But we have one final question from NetGuru, and this is kind of one that we finish all our episodes on. And it's, if you had a magic wand and you could wave that wand and teach something to all the 12-year-olds across the world, from an education perspective, what would you look to teach them?
Well, so I think so I wouldn't teach a specific technology because technology is developing so quickly. I think this you would need to ask me next year again, and I would say something different. So therefore, I think it's super important and relevant to learn to kind of adopt and to also emerging developments and being open to them. Yeah, because so there will be especially for the people who are 12 years old now today, they will see so much change, in technology and service that's used in whatever regulatory environments and kind of economic changes. I don't know. So this there will be so much change, and I think the core competence of people who are born into the future, it's really to be open to these developments and being very kind of so that they connect, so that they anticipate, because so there will be a lot of change coming to them, and if they can react to this will be a core strength.
Nice. That's a good note to end on. I really like it. Yeah, I think it's a scary world for kids growing up now, but it's one full of opportunity and so much excitement. And I'm excited to see what the future holds, not just for decentralized finance, but or fintech, but just in technology in general. So there we have it. I'm going to wrap up today's episode. Peter, you've been an amazing guest. I've really, really enjoyed it. And I really appreciate every one of you that's logged on today to listen to the episode. And make sure you tune in next Tuesday for our episode with Wise as well. Thank you. Speak soon.
Thank you so much.